Hey everyone, today I just want to make a quick video on ICT breaker blocks, how to identify them and trade them. So before we even get started, I just wanted to make this very clear for people who may be new to ICT concepts, and it's that you can very simply think of this setup as just support turned resistance and vice versa. So right here, this is what a bearish scenario might look like. You have this market structure shift caused by this aggressive move below an old low. And now with that shift in structure, you expect this old low to become resistance for price to potentially reject and continue lower. And the psychology behind it, which ICT talks about in his core content, is that it's essentially punishing traders looking for a breakout above the first high. And those who got long somewhere in this leg are now trapped after the bearish market structure shift. And they're going to want to hold on and ideally wait for price to return back to their break-even spot where they can then exit their position for no loss. So one of the keys here is that a breaker block is formed when you have a run of liquidity before a market structure shift. And the same goes for a bullish scenario. You want to see a run below old lows before market structure shift higher. So what you want to do in a bearish scenario is look in between these two higher highs, find the short-term low, and then find the last down close candle right here. And if you extend that out in time, that becomes your breaker block. The same thing for a bullish scenario here. You want to look at these two lower lows, find the short-term high, then find the last up close candle right here. And if you extend that out in time, that becomes your breaker block. So we have an example here of a bullish setup where price runs old lows and you have some displacement that creates this market structure shift above recent highs. So what we said in the previous slide is that we want to look at these two lower lows, find the short-term high in between them, and then the last up close candle in the short-term high is what creates your breaker block. And usually with order blocks in general, you do want to assign the most weighting to the candles that have the largest body from open to close. So I put my breaker block around this. And if I extend that out in time, you see that price rejects this area perfectly. And just to add some more analysis to this area, you could delete this breaker block entirely. And you can see that price did retrace to discount below this 0.5 fib. And you also have this order block, which from the logic of the ICT mentorship model is the consecutive down close candles before the up move. And it tags both of those perfectly in addition to the breaker setup that we had on here first. And this is obviously extremely similar to the 2022 mentorship model because you have a run of liquidity, market structure shift, and then you look for your discount entry, ideally in a fair value gap. So obviously it would have been nice if price retraced into this fair value gap right here to give you an ideal entry for the mentorship model, but this breaker just provides another method of entry for you to potentially get long here. So now we're looking at a bearish setup and you see price takes liquidity resting right here and also from pre-market. And you can see we have an aggressive break of the lows indicating our market structure shift. And so according to what I mentioned earlier, you want to look at these two higher highs. You want to find that short-term low in between them. And then the last down close candle in that series is what makes your breaker block. So I have this candle highlighted right here. You have this market structure shift. So in this case, price respected this level pretty heavily. It tapped it and then immediately went lower. So what happens if you miss this entry? Well, if you know about breaker blocks and you know that price rejected that area immediately, then you might want to look for entries where future order blocks are being respected. So if we just delete this, then we can say we see this pretty big up close candle forming right here, but structure does not really break below that. It continues higher. Now we have this new order block forming in the form of these two candles. And then we do break structure after that and retrace up into it for another rejection to potentially get short and see a continuation lower. And one last example here, this is a bearish scenario. So you have these two relative equal highs forming, then you have a quick run above those highs, and then a sharp move lower indicating your market structure shift. So what do? You look in between those higher highs, look for the short-term low that formed, and the last down close candle before that is your breaker. So this candle right here is my breaker block. I extended that out in time. We also have a fair value gap in this area, and it did take a couple hours for price to eventually get back to that area, but it did prove to be a strong resistance point from which it continued lower. So some key takeaways here. The first is that liquidity has to be ran in order for that short-term low to be considered a breaker block. That's number one. Number two is that you really want to see that displacement to indicate that market structure shift. Displacement is always a key factor in looking for these types of setups. And third, just remember that this setup is essentially just support turned resistance and vice versa. So you have this local low that formed, you broke it, retraced up into it, and now it's resistance. And the reason I'm describing it that way is because I know how difficult it can be to grasp the whole dictionary that comes with all this ICT jargon and everything. And so if you just apply the principle that it is essentially support turned resistance after a market structure shift, then I think that gives beginners a good chance of seeing this pretty clearly. So as always, if you have any questions, please feel free to ask me in the comments or send me a message on Twitter or Discord. But I hope this video helped. If it did, please give it a like and subscribe to the channel, and I'll see you in the next one.